biggest lesson I've learned so far this year is not to force anything, which takes me right to the point. It's okay not to trade. You do not have to trade every day. What you must have is a strategy about the market and about your specific position. So I'll give you an example. Dating back 7 trading days, I've only made 6 trades in that time span. I've made 4 losing trades, 1 winning trade, and 1 trade that's live for another 2 weeks. The point is, if you all remember when I interviewed PB, right, the 14-year-old kid, I said, how long's your longest losing streak been? And he was like, 3 weeks. My longest losing streak, it's about a week. I mean, I've been off for the last week because I don't believe the frothiness in the market. And I'm going to give you some specific examples. But first, it's okay not to trade. It's okay to watch the market. It's okay to tell yourself, this is the position I think I would have taken, and then see how it pans out. Now, especially if you're on a losing streak. So I've mentioned I've only traded 6 times in the past 7 days. I did SPY puts that I made money on, SPY puts that I lost money on, UVXY calls that I lost money on, Tesla puts that I lost money on. And when I say I lost money, it's like 2,300, 1,300, 500, 800. It's nothing that substantial for my accounts. Why? Because although I thought the market was going to go down, I can't fight momentum. So when I had my UVXY calls and I'm riding them out, there's nothing more to do. I think the market frothiness is a little crazy. So right now we're looking at a firm, AFRM. You guys can see it's about $44.80. If we look back to March 14th, which was 2 Fridays ago, the stock was actually under $26 because I picked up some shares from my own personal account at $26. Now, where did I sell them? At $37. $7, 20% less than where we are. Why? Because the stock went from 26 and now let's just say it's 45. So that's $19. That's about 70%. The stock's 70% higher. Now, something doesn't click. Let's look at another stock. We can look at EPAM, right? Now, remember, I was in this stock at $184. So let's just bring up the 1-month chart because you don't have to go back that far. Here we go. It actually went down to like 165 this day, okay? So let's look at where we are right now, and we're at 288. So from 188 to 288, you're talking about a 60% gain. Then we go to a favorite. Let's look at NVIDIA. A lot of people like NVIDIA, right? Because they're a chip manufacturer. They're leading the way. They're number 1 in their industry. Look, it's up 10% today to $281. Let's look back to a month because I'm pretty sure on light volume, we were right around $200 that day. In fact, I think we went under to $199. But let's see. So $200 to $280 is what? A 40% gain. So I tell you, you don't have to chase the market. You can wait patiently on the sidelines because you can't fight momentum. Although I think the market's frothy and overvalued, and although a lot of people and institutions on Wall Street agree with me, it doesn't mean the market's going to sell off. Now, going into Thursday's day of trading, there were a ton of puts bought on the QQQ, bought on the SPY, vice versa. There were a ton of calls on Tesla and Apple. Well, both positions could not win. So Tesla and Apple won out today. The puts on the QQQ and SPY did not. But if I tell you the puts on the QQQ and the SPY were about $20 million, and the calls on Tesla and Apple only measured about $5 million. So big money was wrong. So rather than saying, oh, big money's always right, no, it's okay to be on the sidelines. So what do we plan for? Okay, we'll look at a stock and you'll say to yourself, airlines, okay? There's another COVID spike going on through Asia and through parts of Europe, and it's probably going to hit the States. So you take a look at a stock like United Airlines, okay? And you say, okay, United Airlines, why? Because they have exposure to international flights. So if there is a COVID spike and less people start traveling, this stock might get hurt more than somebody local like Southwest Airlines, LUV. So let's just take a look at the 5-day chart. You can see outflow here, price is 41 and change, very light volume today. And where are we? We're close to $43. So we're about 5% from the time that big money was selling. Now, we did gap up on the 21st, but if we zoom out and you look at volume at the bottom of the screen, there wasn't heavy buying volume all the way back to maybe here, which is $40. So if we look again, we're about $3 higher than 40. That's about 8% higher. So I'm saying to myself, okay, two positions you can take. If you like United Airlines and you like the recovery play, you say, I want to get an 8% cheaper. So it's $43 right now. I'll set my bid whenever it hits for $39.80. Now, what does that mean? It means you're not chasing. So it's all about having strategy, executing, and most important, have patience. You work very hard for your money. It's not about being an active trader. It's about being an efficient trader.